Hello, good morning, and this is the 30th of April and the daily market update from Aiden. Before we continue any further, please increase the quality of your YouTube videos to 1080 pixels in high definition. This will allow you to view the charts and markings in much greater detail. And the first chart in foreign exchange today is dollar Swiss franc, which obviously unfolded in a very clear five-wave move higher from their August low of 70.72. This move was in excess of 35%. Since then, we have been, for the whole of 2012, correcting this five-wave rally. So far, I believe, we've done a wave A, and currently in the latter stages of wave B, A, B, C, D, and we'll now have a likely wave E to about 91.80, possibly 92 cents or centimes per dollar, and will then drop to about 0.85. This will likely coincide with strength in global risk assets. And we'll also set up an A, B, C correction, substantial dollar strength, which will likely coincide with massive weakness in global risk assets. Moving into a lower time frame of hourly charts. A couple of week ago, I believe that the triangle wave B has finished. So we've had a wave A, and since then I believe we've had waves A, B, C, D, E of B, and we're ready to begin a new decline. However, my belief is now changed, and I think that we've only just finished wave D here and need a wave E to about 92. Provided that 92.50 does not give, I'm still very much bearish dollar Swiss in the near to medium term from about 92. So I expect a rally of probably no more than 1%, and then we can really load up on shorts here. This rally could be done today or tomorrow. The next chart for foreign exchange is dollar Polish. So this is the dollar against the Polish zloty. And here again we have a very neat five-wave impulse lower and a three-wave up correction, so we're calling for new lows, certainly below February lows of 3.04. However, this really doesn't look like it wants to give straight away, and there's likely going to be a bounce, possibly to a new high of 223, 224, from where on we can load up on shorts to take us to a new low. And very interestingly, dollar Russian ruble. Now this is a very interesting chart in the medium term. They're all very interesting charts in the medium term as well as the short term. Russia, as we know, is a heavily oil reliant economy, particularly for its economy, and this is the chart of the dollar Russian ruble from the 2008 low, which is likely an impulse of some sort that has been correcting since the 2009 high. So it took it 3 years to correct with waves A, B, and C. Since then we had a perfect impulse higher with no overlap here between waves 1 and 4. 1, 2, 3, 4, 5, and another equally perfect correction A, B, C. This C is in its latter stages. So even if we give a little bit more here to the downside, this is dollar downside, ruble upside, the stage is set for substantial accelerated move higher beyond 36. So that's a 25 to 30% depreciation of the Russian ruble, appreciation of the dollar. It can only coincide with substantial weakness in global risk assets and possibly great weakness in crude oil. And the final charts for today are Goldman Sachs. Now Goldman Sachs I'd like to look at on a 4-hourly chart. Very interesting pattern here. Presents itself with a correction that is likely done. I'm sorry for the slight pause in my chart. And I'm resuming again with Goldman Sachs. The decline that happened in 2011 has been a five-wave affair and a perfect retracement since then. Waves A, wave B, and wave C. Wave C has again unfolded an absolutely picture-perfect impulse from here to there, that is possibly done. So long as $128.75 per share holds on Goldman Sachs, we are very, very convinced that we've had 1, 2, 3, 4, 5 waves down, wave A, B, and possibly C rising to about 120 plus or minus, possibly to 123, 124, and from then on, rapid accelerated declines to new lows in Goldman Sachs of over 30% decline from anticipated correction highs. Probably not very expected by Goldman Sachs shareholders there. And Morgan Stanley, equally very precariously positioned stock with very similar patterns. And here we are with Morgan Stanley, waves A, wave B, and a perfect 1, 2, 3, 4, 5 affair in wave C. Since then we had 1, 2, 3, 4, 5. This is possibly wave 4 right here, and tiny little triangle consolidation. Please allow for new lows, possibly to 1650, maybe 1630, and since from there, again, I expect a 3-wave correction, possibly as high as 1950. This will set the stage for a 5-wave down, 3-wave higher, and rapid accelerated declines from anticipated correction highs of also over 40% to new lows in Morgan Stanley. Morgan Stanley and Goldman Sachs will be my preferred ways to play the onset of recession in the United States. Thank you very much for listening. Bye bye.